Section 24, letter B, rate of tax on certain passive income. Number 1, interest, royalties, prices, and other winnings. A final tax at the rate of 20% is hereby imposed upon the amount of interest from any currency bank deposit and yield or any other monetary benefit from deposit, substitute, and from trust funds and similar arrangement. Royalties except on books as well as other literary works and musical compositions, which shall be imposed a final tax of 10%. Prices and other winnings derived from sources within the Philippines. Provided, however, that interest income shall be exempt derived from sources within the Philippines. Provided, however, that interest income received by an individual taxpayers from depository bank under the expanded foreign currency deposit system shall be subject to a final income tax at the rate of 15% of such interest income. Provided further that interest income from long-term deposit or investment in the form of savings, common or individual trust funds, deposit substitute, investment management accounts, and other investment evidenced by certificates in such form prescribed by the Bangko Sentral ng Pilipinas shall be exempt from the tax imposed under this subsection. Provided finally that should the holder of the certificate pre-terminate the deposit or investment before the 5th year, a final tax shall be imposed on the entire income and shall be deducted and withheld by the depository bank from the proceeds of the long-term deposit or investment certificate based on the remaining maturity thereof. 4 years to less than 5 years, the rate is 5%. 3 years or less than 4 years, the rate is 12%. And less than 3 years, the rate is 20%. 2. Cash and or property dividends. A final tax at the rate of 10% shall be imposed upon the cash and or property dividends actually or constructively received by an individual from a domestic corporation or from a joint stock company, insurance or mutual fund companies and regional operating headquarters of multinational companies, or on the share of an individual in the distributable net income after tax of a partnership of which he is a partner, or on the share of an individual in the net income after tax of an association, a joint account, or a joint venture or consortium taxable as a corporation of which he is a member or co-venturer. 6% beginning January 1998, 8% beginning January 1999, and 10% beginning January 2000. Provided, however, that the tax on dividends shall apply only on income earned on or after January 1, 1998. Income forming part of retained earnings as of December 31, 1997 shall not, even if declared or distributed on or after January 1, 1998, be subject to this tax. Shall not be subject to this tax. Okay. C. Capital gains from sale of shares of stock not traded in the stock exchange. The provisions of Section 39B notwithstanding, a final tax at the rate of 15% is hereby imposed upon the net capital gains realized during the taxable year from the sale, barter, exchange or other disposition of shares of stock in a domestic corporation, except shares sold or disposed of through the stock exchange. Not over 100,000, the rate is 5%. On any amount excess 100,000, the rate is 10%. D. Capital gains from sale of real property. Number 1, in general, the provisions of Section 39B notwithstanding, a final tax of 6% based on the gross selling price of or current fair market value as determined in accordance with Section 6E of this code, whichever is higher, is hereby imposed upon capital gains presumed to have been realized from the sale, exchange, or other disposition of real property located in the Philippines, classified as capital assets, including facto de retro sales and other forms of conditional sales by individuals, including estate and trust, provided that the tax liability, if any, on gains from sales or other disposition of real property to the government or any of its political subdivisions or agencies, or to government-owned or controlled corporation shall be determined either under under section 24 letter A or under this subsection at the option of the taxpayer. 2. Exemption. The provisions of paragraph 1 of this subsection to the contrary notwithstanding, capital gains presumed to have been realized from the sale or disposition of their principal residence by natural persons, the proceeds of which is fully utilized in acquiring or constructing a new principal residence within 18 calendar months from the date of sale or disposition, shall be exempt from capital gains tax imposed under this subsection, provided that the historical cost or adjusted basis of the real property sold or disposed shall be carried over to the new principal residence built or acquired, provided further that the commissioner shall have been duly notified by the taxpayer within 30 days from the date of sale or disposition through a prescribed return of his intention to avail of the tax exemption herein mentioned, provided still further that the said tax exemption can only be availed of once every 10 years. Provided finally that if there is no full utilization of the proceeds of sale or disposition, the portion of the gain presumed to have been realized from the sale or disposition shall be subject to capital gains tax. For this purpose, the gross selling price or fair market value at the time of sale, whichever is higher, shall be multiplied by a fraction which unutilized amount bears to the gross selling price in order to determine the taxable portion, and the tax prescribed under paragraph 1 of this subsection shall be imposed thereon. Section 25, Tax on Non-Resident Alien Individual. A. Non-resident alien engaged in trade or business within the Philippines. Number 1, in general, a non-resident alien individual engaged in trade or business in the Philippines shall be subject to an income tax in the same manner as an individual citizen and a resident alien individual on tax income received from all sources within the Philippines. A non-resident alien individual who shall come to the Philippines and stay therein for an aggregate period of more than 180 days during any calendar year shall be deemed a non-resident alien doing business in the Philippines. Section 22, letter G of this code notwithstanding. 2. Cash and or property dividends from a domestic corporation or joint stock company or insurance or mutual fund company or regional operating headquarters of multinational company, or share in the distributable net income of partnership, joint account, joint venture taxable as a corporation or association, interest, royalties, prices, or other winnings. Cash and or property dividends from a domestic corporation or from a joint stock company or from an insurance or mutual fund company or from a regional operating headquarters of multinational company, or the share of a non-resident alien individual in the distributable net income after tax of partnership of which he is a partner, or the share of a non-resident alien individual in the net income after a tax of an association, a joint or a joint venture taxable as a corporation of which he is a member or a co-venturer, interest, royalties, and prices, or less which shall be subject to tax under subsection B 1 of section 24, and other winnings shall be subject to an income tax of 20% on the total amount thereof, subject provided however that royalties on books as well as other literary works and royalties on musical compositions shall be subject to a final tax of 10% on the total amount thereof. Provided further that the cinematographic films and similar works shall be subject to the tax provided under section 28 of this code. Provided furthermore that interest income from long-term deposit and investment in the form of savings, common or individual trust funds, deposit substitutes, investment management accounts, and other investment evidenced by certificates in such form prescribed by the Bangko Sentral ng Pilipinas shall be exempt from the tax imposed under this subsection, provided finally that should the holder of the certificate pre-terminate the deposit or investment before the 5th year, a final tax shall be imposed on the entire income and shall be deducted and withheld by the depository bank from the proceeds of the long-term deposit or investment certificate based on the remaining maturity thereof. 4 years to less than 5 years, the rate is 5%. 3 years to less than 4 years, the rate is 12%. Less than 3 years, the rate is 20%. 3. Capital gains. Capital gains realized from sale, barter, and exchange or share of stock in domestic corporations not traded through the local stock exchange and real properties shall be subject to the prescribed under subsection C and D of section 24. Okay, B. Non-resident alien individual not engaged in trade or business within the Philippines. There shall be levied, collected, and paid for each taxable year upon the entire income received from all sources within the Philippines by every non-resident alien individual not engaged in the trade or business within the Philippines as interest, cash and or property dividends, rents, salaries, wages, premiums, annuities, compensation, remuneration, emoluments, or other fixed or determinable annual or periodic or casual gains, profits and income and capital gains and a tax equal to 25% of such income. Capital gains realized by a non-resident alien individual not engaged in trade or business in the Philippines from the sale of shares of stock in any domestic corporation and real property shall be subject to the income tax prescribed under subsection C and D of Section 24. C. Alien individual employed by regional or area headquarters and regional operating headquarters of multinational companies. There shall be levied, collected, and paid for each taxable year upon the gross income received by every alien individual employed by regional or area headquarters and regional operating headquarters established in the Philippines by multinational companies as salaries, wages, annuities, compensation, remuneration and other emoluments such as honoraria and allowances from such regional or area headquarters and regional operating headquarters, a tax equal to 15% of such gross income, provided, however, that the same tax treatment shall apply to Filipinos employed and occupying the same position as those of aliens employed by these multinational companies. For purpose of this chapter, the term multinational company means a foreign firm or entity engaged in international trade with affiliates or subsidiaries or branch offices in the in the Asia Pacific region and other foreign markets. D. D. Alien individual employed by offshore banking units. There shall be levied, collected, and paid for each taxable year upon the gross income received by every alien individual employed by offshore banking units established in the Philippines as salaries, wages, annuities, compensation, remuneration, and other emoluments such as honoraria and allowances from such offshore banking units, a tax equal to 15% of such gross income, provided however, that the same tax treatment shall apply to Filipinos employed and occupying the same position as those of aliens employed by these offshore banking units. E. Alien individual employed by petroleum service, contractor, and subcontractor. An alien individual who is a permanent resident of a foreign country but who is employed and assigned in the Philippines by a foreign service contractor or by a foreign service subcontractor engaged in petroleum operations in the Philippines shall be liable to a tax of 15% of the salaries, wages, annuities, compensation, remuneration, and other emoluments such as honoraria and allowances received from such contractor or subcontractor, provided, however, that the same tax treatment shall apply to a Filipino employed and occupying the same position as an alien employed by petroleum service contractor and subcontractor. Any income earned from all other sources within the Philippines by the alien employees referred to under subsection C, D, and E hereof shall be subject to the pertinent income tax, as the case may be, imposed under this code. F. The preferential tax treatment provided in subsection C, D, and E of this section shall not be applicable to regional headquarters, regional operating headquarters, offshore banking units, or petroleum service contractors and subcontractors registering with the Securities and Exchange Commission after January 1, 2018, provided, however, that existing regional headquarters, regional operating headquarters, and petroleum service contractors and subcontractor presently availing of preferential tax rates for qualified employees shall continue to be entitled to avail of the preferential tax rate for present and future qualified employees. Section 26. Tax liability of members of general professional partnership. A general professional partnership as such shall not be subject to the income tax imposed under this chapter. Persons engaging in the business as partners in a general professional partnership shall be liable for income tax only in their separate and individual capacities. For purposes of computing the distributive share of the partners, the net income of the partnership shall be computed in the same manner as a corporation. Each partner shall report as gross income his distributive share, actually or constructively received in the net income of partnership.